There are thousands of stocks available to trade, but which ones are the best for day trading? When I was first starting to trade, I had no idea what stocks to trade. So I was constantly trading the same stocks over and over. And those stocks were names I was familiar with, such as Apple or Facebook and Nvidia and Disney. I would always keep those stock charts on watch and wait for certain patterns that I recognized and then trade them. But most of the time, what I thought was a picture perfect trade setup, I would end up taking the trade and then lose money on the trade by getting faked out or stopped out. The reason for this was that these stocks were trading on average volume, and the majority of that volume was coming from high frequency trading computers. The best stocks to trade are the ones that the majority of traders come from real people. So, what stocks do all the real people trade? The stocks that have breaking news for that day. The news can be an earnings report or a FDA approval, a positive clinical drug study, something that draws the attention of other day traders. And when this happens, these stocks can experience 100% more returns in one day. These stocks are called breakout stocks, and these are the kind of stocks that we're going to be trading. Here that you see on the screen is a chart of a stock that made over 120% move in one day. This is an online advertising company that scored a contract with Google, which caused a lot of interest from traders that pushed its stock price from 347 all the way up to 784. Now, the goal here isn't to capture the entire move. In fact, you will never buy at the very bottom and sell at the very top, but our goal is to capture bits and pieces of this move. If we can capture just 10% of the move, then we just made a return most investors make in an entire year, and we did it in one day. We'll talk about support and resistance coming up, but notice here how each time the price rises and holds above the yellow horizontal lines, the stock shoots off to the next upper yellow line. It's these quick surges of momentum that we are looking for and trying to capture. So the kind of stocks that make these types of moves are typically lower priced, ranging from $2 to $10. And the beauty of trading in this price range is that you don't need to have a big account to make a decent amount of money from. Some traders start out trading the higher priced stocks with $100,000 accounts, but the reality is you can make more money using a fraction of $100,000 by trading the lower priced stocks. It's because the higher price stocks don't move as much as the lower price stocks can. We find these plays by searching for stocks that are experiencing high relative volume. Volume is the number of shares that have been traded at any given time, whereas relative volume compares the current volume to the normal volume of a past time period. So in other words, relative volume looks at the average volume, and if a stock is experiencing higher than average volume, this is what we're going to be searching for. When a stock is trading with higher than normal volume, that means thousands of other day traders are trading and watching the same stock. That is where the party is at, and that is where we should be, because if thousands of other traders are all watching the same stock, we're all watching the same charts, and we're all predicting a breakout to occur to the upside from an obvious chart pattern, then most likely other traders are going to act on it and buy up the shares. So the more eyes on a stock, the more likely technical patterns will play out as predicted. So volume is what needs to be there in order for technical patterns to work. Even the best technical patterns will not work if there is no volume. When stocks are trading on high volume, we normally see these stocks experience high volatility. Volatility is the range in which the stock price moves. It's going to be hard to make money if the stock only moves up or down a few cents every minute, but if a stock can move up or down 20 cents every minute, then this is going to provide an easy opportunity to profit quickly. The chart on the left shows a chart that would be really difficult to make much money, unless if you were planning to hold for hours. The chart on the right has a greater volatility range, making it easy to capture big price movements in a matter of minutes. These are the types of stocks that we want to be trading. It's not uncommon to see some stocks go up 100% or more intraday. I see it almost every day. And there are two things that all these types of stocks have in common: high volume and low float. Float is the number of shares a particular stock has available for trading on the open market. This is the supply. So, whenever a company has an initial public offering and it is first listed on the stock exchange, that company releases a number of shares to be traded out into the public. Here's an example of why float is important to day traders. Apple has a float of 4.5 billion shares available to be traded. This is a high float stock. Amcon Distributing has only 180,000 shares available to be traded. This is a low float stock. If for some reason each of these companies makes some groundbreaking discovery that increases the demand to own shares, which one do you think will have the biggest impact on its stock price? The one with the less supply, because there's less of it. Now, I know that both of these companies are not medical companies, but just for the sake of the example, let's say that somehow Apple cured cancer, or in other words, just came out with the most outstanding news. It doesn't matter how great the news is, Apple would never go up 100% in one day because the supply is so large. The number of shares it has available for trading is more than half the number of people on Earth. Whereas if Amcon Distributing came out with some groundbreaking discovery, the supply is so small that the demand would be huge. If 1,000 people each had 180 shares of Amcon stock, and Amcon just cured cancer and the current stock price was at $2, those shareholders know they could sell it for much, much more because millions of other traders would want those shares. This is why some stocks can make moves going from $2 to $100 in a matter of a few days. It's because the supply is so low and the demand is so high. This is why I day trade low float stocks, because they provide the volatility to make large gains more quickly. If I were to trade the higher float stocks, I would need to either use a ton of money or wait much longer during trades to get the same returns I would trading the low floaters. So for those of you that have a small account and don't like being in trades for hours, low float stocks is what you need to be trading. A stock considered to be low float would have less than 20 million shares available on the open market. A stock considered to be high float would have more than 100 million shares on the open market. I've seen stocks with 50 million share floats make great moves, but some of my best winning trades have come from stocks that have 10 million shares or less. So the lower the float, the more potential that stock will have to make a big run, as long as it's accompanied with high relative volume. Every morning, there will be a new stock with breaking news that grabs the attention of other day traders. But it's important to still keep the stocks you formerly traded on watch for continuation moves. When a company makes a major news release, its stock price can make a huge move one day and keep continuing higher for weeks. Once a stock has made a huge move, traders remember that name. So if it starts to make another move, traders will recognize that name and keep supplying that stock with the high volume needed for good trading. That's why it's important to keep watch for break of previous day highs or technical patterns on the daily chart on these former runners. All right, so let's do a recap of what stocks we are going to be looking for to trade. We only want to trade stocks that have the attention of the majority of other day traders. And the reason these stocks have gained the attention is because they have released breaking news. Now, I want to point something out very important, so listen up. The news itself is not important. We never want to take a trade just based on the headline, no matter how good the news is. I've seen stocks release excellent news, only to see that the stock price drop all day long. We only want to take trades based off the charts. We are day traders. We only take trades based off chart patterns. Investors make trades based off news. So unless you plan on holding that stock for a long time, never trade solely based off news. Since the news isn't really important, searching and combing through news articles isn't really necessary. We can easily find which stocks have breaking news that have also grabbed the attention of other traders by simply just searching for stocks trading on high relative volume. So high relative volume is the criteria we should be looking for. Once we have found the stocks trading on abnormally high volume, we can choose to trade the stocks with the lowest float for the biggest potential. So now that we have the criteria for what type of stocks we'll be trading, how do we find them? This is where stock scanners come in. A scanner will search through the thousands of stocks listed on the exchanges for whatever criteria you tell it to look for. You can get really granular with these scanners and program them to look for pretty much anything you want. You can look for certain chart patterns, stocks that are reversing, stocks that are breaking new highs, stocks that are active on social media, stocks that are breaking support or resistance levels. The list goes on and on. The scanners I use are my biggest asset because every trade I take comes directly off my scanners. The scanners I use come from a company called Trade Ideas. They literally have the best scanning program on the market, and no other program even comes close to what Trade Ideas offers. I highly recommend them. Now, this software is a paid subscription service, but they do have a free version which has a 15-minute delay. So by having a 15-minute delay, you won't be able to find stocks in real time, but you would still be able to see what stocks could be in play for that day by creating a pre-market scan. Having a 15-minute delay on your pre-market scan isn't a big deal because all we are looking for are the biggest gaining stocks trading on the highest volume. These are the stocks that will have the breaking news, which other day traders all have their eyes on. Over here on the right is a screenshot of my pre-market scanner. It searches for stocks that are priced between $1 and $10, stocks that are gapping up more than 5%, stocks that have a float of less than 100 million, and stocks that have a volume of more than 20,000 shares. So every morning, I look at this scanner and comb through each one of these stocks by looking at the charts and determining which ones are the best candidates for day trading that day. I hope this has been informative for you, and thank you so much for watching.